Hello, everyone. Welcome to Online Seller UK podcast. My name is Prabhat, your host for today, and I've got another really interesting topic, which is maximizing your e-commerce business valuation in the current market. I'm joined by Nick. Nick is head of mergers and acquisitions at Dragonflip. So I think it will be good for you, Nick, to introduce yourself and your company before we go further discussing the topic.
Absolutely. Yeah, my name is Nicholas Brown. I'm the head of M&A for the US and UK markets at Dragonflip. I personally have been in the industry of M&A for digital assets since 2015, and I started at Dragonflip in 2021. And Dragonflip, we are e-commerce business brokers, so we only represent e-commerce businesses, and our buyers are only e-commerce buyers. So we're very niche, and we specify in this particular area because that's what we know, and we help other e-commerce business owners exit.
Okay, excellent. So we know of a lot of businesses want to build business on Amazon or e-commerce in general, sort of thing. So and it takes time. Some people take a couple of years time, and it's their baby. As you say, once you're developing it. And trying to exit is a very important decision, and it's not a very light decision that somebody would talk about. So, do you want to talk us through, your experience with businesses that you've dealt with for them to exit from the Amazon business? Do you want to talk us through a little bit of intro on what's happened to there and why they started thinking about exiting?
Yeah, so I think there's been a combination of factors that have created a lot of people either looking to or becoming interested in exiting their e-commerce businesses. I mean, some sellers have started their businesses with the idea that they were going to sell from the beginning. Others maybe started an Amazon or Etsy business as a side hustle, and then they've grown the business, and maybe they've reached an inflection point where they need a lot more capital to really grow, or they need to expand to other marketplaces or in other countries, and they don't have that expertise. So there are several reasons why someone might come to us. But I think another thing that is really increasing interest is the inundation of the market by the Amazon aggregators. I think since 2020, in our list, we have over 75 aggregators at Dragonflip, but these are investment groups and investors that are pooling their money together to try to identify quality Amazon brands and then bring them under one umbrella to use economies of scale and pool resources to grow the brands even more after they've acquired them. And so collectively, these buyers have raised over 12 billion in capital. And so there's a lot of money in the marketplace. And because there's a lot of money, there's more competition, and multiples have been going up. Especially since when I started, I started in 2015. When I started, an average exit multiple was around a 2.5x of your seller's discretionary earnings. And in 2021, we saw the average was around 4x, and I've seen some even 5 and 6x. So you hear all these stories about people exiting at higher multiples, plus they've reached an inflection point. So those two things combined definitely creates interest in possibly exiting. That's when buyers come to us to discuss these topics.
Excellent. So let's talk about 2.5 and 4 times. So what makes a valuation times 4 compared to 2.5?
Yeah, so at Dragonflip, we kind of categorize things into 3 main categories. We take a look at your finances, your products that you actually sell, and then the business processes that you have. And kind of wrapped into those business processes are growth opportunities. So sometimes it's a separate thing, and other times we lump them in with the business processes. So if in these categories, they have certain benchmarks if you hit those benchmarks, that'll definitely increase your valuation multiple. And if you don't hit them, it'll negatively impact your valuation multiple. So for example, when we're looking at finances, we're analyzing business, we want to see at least 2 years of financial records. A business that's less than 2 years old can sell, but it's more risk from the buyer's perspective. And that's what we're all trying to, that's what I think the best way to think about a valuation multiple is that it's a distillation of risk from the market's perspective. So when you're thinking about it, if a business has less than 2 years of records, then there's uncertainty, so that lowers the valuation multiple. If you have more than 2 years, 5 or 10, you have a good understanding of how this business has been performing, how it's been run, and so you're more comfortable investing more money in that business. Another thing we look at is your year-over-year revenue. So if the benchmark we use is 30%, if you're growing over 30% year-over-year top line revenue, then that'll certainly increase your valuation multiple. Profit margins, our benchmark is 20%. If you're above 20%, that'll increase your valuation multiple, and that'll get you from that 2.5x to that 4x. And then another thing, it's not really a benchmark, but it's about your financial records themselves. Are they detailed? Are they verifiable? Do you have a CPA that has put them together? Is there commingling? If you don't have any of those things, there's no commingling, and it's prepared by a professional, then that will certainly increase your valuation multiple as well. And that's just an idea of what we look at when we're talking about finances.
Yeah, so it's not about the growth potential, but you've also highlighted some of the importance of the operational, the management side.
Yeah.
And the structure of the business.
Yeah, when you're looking at the business processes, some things that we look for that we know will enhance the valuation multiple and your exit multiple is the owner time commitment. Do you have like a GM that handles all the day-to-day operations? Have you outsourced some tasks to either employees or contractors? The lower your owner time commitment, generally speaking, and that's to put a number on it, let's say you work less than 10 hours a week in this business, that will make your business much more attractive than a business that requires you to spend 40 hours a week running it. Because we at Dragonflip, we analyze a lot of businesses, and the owners are fulfilling the orders themselves. They're doing all the marketing. They're looking at all the potential suppliers, and that takes a lot of time. And their business is worth less in terms of when the market is looking at it than a business where everything is handled by a third party or employees, and the owner kind of just has to think about the big picture. Other things that we think about are standard operating procedures. If you have those in place, that will help that will make the transferability of the business much higher. And if you're not going to lose any of that institutional knowledge, then that's better for the buyer, and they're willing, it's less risk, and they have a higher valuation multiple. So yeah, that's another thing we look at.
Yeah. I think yes. So thanks for highlighting some of the things. Yes, for a business to be ready to exit, and some of the things can take a long time, like operational may take a long time to structure and so on. So let's talk about Dragonflip. Okay, so when someone comes and talks to Dragonflip, so what are the processes you follow, and talk us through some of the advantages. Talk us through why we should go through Dragonflip to exit our Amazon business.
Yeah, I would say there are pros and cons when it comes to using a brokerage firm. I will talk about the pros specifically with Dragonflip because I'm the most knowledgeable about that. So when you come to us, like I said earlier, we specialize in e-commerce businesses. So we're experts in that particular field. We know the e-commerce industry. All of our buyers are e-commerce buyers. So when you come to us and we bring your business to our marketplace and to our buyers, they're all looking for e-commerce businesses. Some of the more general brokers online, they sell content businesses, SaaS businesses, in addition to e-commerce. So you're not necessarily, when you're quoted the number of buyers in their pool, that's not necessarily how many buyers are looking for e-commerce businesses. And another thing that is an advantage that we have as Dragonflip, we're European based, but we have a lot of buyers throughout the world. And something that we specialize in is that we have a diverse pool of buyers. So not just Amazon aggregators, we have private equity in our buyer pool. We have individual buyers. So if a business doesn't fit a particular acquisition criteria for, let's say, an aggregator, we still have a lot of buyers in our pool that will be interested in an e-commerce business. So that helps us make sure that your business exits to the right buyer, because we have a large range of buyers in our pool. And then when you're using a broker in general, you have a resource with you every step of the process. We start with evaluation. and then we discuss with when a buyer comes to, or seller comes to us, we start with the valuation. We talk about why we value the business this way, what increase and decrease the valuation multiple. And then if they're happy with that, then we create the marketing materials, we put together a sales plan, and then we actually are with them when the business is going to market. We vet buyers, set up the buyer-seller calls, and then even after the offer is accepted, we're there throughout post-offer due diligence to try to put out any fires, because we've done this process so many times. We have an idea of when things are starting to go downhill, maybe before someone who's never done it before. And then we're there until the money is in your bank account, basically. So it's always good to have a resource, and especially if you've never exited your business before, and that's what we can help you with. There are some cons.
Just just to highlight one, you mentioned that many people, do this once in a lifetime. Not many people exit business again and again, So I like the fact when you mentioned that you go through the full process and you sort of handheld the seller and buyer both sides to go through the process. So it's a really good part, I think. Just wanted to highlight. So sorry, continue.
I will always want to put the pros first, but there is some, I won't say cons, but there are some aspects to take into consideration when you're going to use a broker. And I think the biggest one is that the process will take longer than if you sell directly to an aggregator or another buyer. And that's because what our job is as a brokerage firm is to maximize your exit price and find the best fit. So that we're not necessarily going to accept the first offer. I recommend that you accept the first offer that comes up to the table. So because we're trying to maximize and leverage other offers and get you the best exit price, this process can take a little bit longer than if you sold directly to an aggregator. The other one is you do have to pay commission. We don't charge any upfront fees or any retainers, but we do charge a success fee if we sell your business. And then the last thing is we have certain requirements in terms of the data we need, in terms of financials, SKU reports. Everything needs to be in order for a broker to effectively bring your business to market. So if you don't have organized financials, or you don't want to pay for an accountant to put those things together, you wouldn't be able to work with us. So it does require some upfront investment. Maybe you've been doing this for years as you're running your business, but if you haven't, we do need to there are certain minimum requirements that we need in order to work with you. So those are some of the things that you need to take into consideration if you are going to look for a broker to help you sell your business.
Yeah, so I think it's all makes sense. And also when somebody contacts you and if there is something missing, for example, if there is some part of operation missing, obviously with your guidance, it can be put in place. And be in the standard that they can move forward, because if they can't move forward with you, perhaps they can't move forward with anybody else, because so that makes sense. Sorry, go on.
I just want to add on to that. And if you don't have those things in place at the start of the process, that doesn't mean we can never work together. I've had numerous relationships with the potential sellers that developed over 6 or 8 months. They come to me at the beginning of the year and things aren't in order, but we meet every month or every quarter to get an idea of what needs to be changed in order to maximize the business exit when we get to the sales process. So if you don't have it immediately, I'm happy to have a conversation with you, tell you what needs to happen, and then maybe you come back in 3 or 4 months and everything's in order, and then we can go to market. So it's not just a no and close the door. It's a not right now, and we'll talk again in a few months.
Yeah, absolutely. No, thanks for sharing this insight. I think it's really helpful to understand the process, and there is always somebody to help to weigh out. So that's really good. So if somebody's used to book a call or contact you, Nicholas, where is the best place to get to you?
So we have a link to my calendar on dragonflip.com. That's our website. You can, if you are listening to this podcast and maybe you have your pen and paper ready, you can email me directly at Nicholas, Nicholas, @dragonflip.com. And if you don't want to talk to me, but you want to get an idea of what your business is worth, we have a valuation calculator on the website as well. And you can enter in some basic information about your business and get an idea of what your valuation will be. It's not as good as a valuation that I would give personally, but it is another resource that you can use on dragonflip.com.
Excellent. Thank you again, Nicholas, for your time today. I'll speak to you soon.
Thank you.
Thanks. Bye.